We're joined now by Jonathan Barratt. He's Managing Director of Commodity Broking Services. So, Jonathan, thanks very much for joining us. My question to you is this. Is Carl, is the chairman of BP here crazy? I mean, first for thinking that BP is so big and important to the U.S. that the U.S. simply couldn't do without them. And secondly, for saying that Tony Hayward's doing a great job.
Oh, look, Lindsay, I think we're in uncharted territory at the moment. I mean, you can see that obviously there is a concern, there is an accident which has occurred, which is catastrophic. BHP, I think, are actually trying to do the best that they can do at the moment in order to contain it, and they're going to continue to try it. I mean, the cruel fact is that we are a consuming globe and we need these sorts of energies. Something like this was going to have to happen, or something like this did happen and has happened, and that is a concern. How do we address it? Well, we don't know yet, and that's what BP, I think, are doing the right thing as best and as fast as they possibly can. But
this is the thing, they're doing the right thing as best and fast as they possibly can, you say, but it is day 33 since the spill, so far costing $22 million a day. And they don't seem to know how to stop this, do they? They're trying one thing after another, but they don't seem to really know better than anyone else what to do here.
Well, I think that's one of the hard things, because we're actually trying various methods to be able to contain it. Now, I think these sorts of things down the track will continue, and we'll also see other situations like this arising. There is no plan for this sort of thing to occur. The best you can do is try and structure a response, an adult response to the problem, and try and get it done as quickly as possible.
But isn't it
obviously there's a
I was just going to say, isn't it completely irresponsible for a company to be pushing limits that it doesn't know what the consequences of are?
Look, I think that's thinking about it from that side. I mean, there are consequences for deep drilling, deep water drilling. There are consequences for extracting oil out of the ocean. There's been a very solid history that everything's been okay. Now, this is a concern which is raised. We might get another issue further down the track when another drilling problem occurs. We had one not so long ago in Australia, but we developed responses to the concern, and they're being addressed in the best possible way. And I think that's all you can really do. Yes, it will affect the price of BP. Yes, people are going to get concerned, and BP could in fact lose more than 25% of its value. But I think at the end of the day, there is a solution. That solution hopefully will be found soon, so that we can get on with supplying, or BP can get on with supplying the world with the energy which the world has chosen to use.
Yes, hopefully we won't have to wait till August for that solution, as many people are fearing. Tell us.
I'm all agreeing with you there.
Well, tell us about the oil price. I mean, what's your outlook for prices going forward?
Look, I think at the moment, what's happening in the Gulf is not affecting the price of oil. I think that given where we are, oil leading into the summer drive time in the US, I think it is at a level which represents a floor for the time being. We've had some pretty significant trading volatility around US $70 a barrel, so I'm actually feeling that this is a good floor for oil at these levels, and I would anticipate, as we move into the summer drive time period, as we move into more of a sustained global recovery, that oil will in fact start to trend up from here.
What's been the factor driving oil prices recently? I mean, we've got the dollar, you've also got concerns over the European debt crisis. Is it a bit of both? What's the main driver here?
Look, I think it's one of the big concerns I find is that people have now become focused on what's happening in Europe. They're failing to realise that the US has got a broad-based recovery. Chinese economic performance still stays with us. But people have been scared by what's happening in Europe as a result of the contagion, and decided to put on risk aversion trades. And as a result of the US dollar going higher, people questioning growth, oil and general commodities have come under pressure, which I think is wrong, because Europe's economy is always generally quite sluggish. A GDP growth between 1 and 1.5%. Compare that to an India and China at 8 and 9%, and America moving out. I think you're going to have a completely different story in terms of demand for crude once the market decides to refocus on coming out of this recession and growth.